Hi traders, Lachlan here. I hope you're absolutely magic. Charts are running live. What I want to do in this video is I would like to talk to you about my preferred Fibonacci retracement levels. Now I want to talk about why we use these particular levels and also how you could use a Fibonacci in order to work out where the market is ultimately going to stall. Now folks, for this video, guys, I'm going to assume that you to a degree know what Fibonacci is. As in a nutshell, I'm going to draw a Fibonacci on here and explain to you in principle what it is. Now, in this case here, we've got a nice little up move, guys, in the market. All I've done is go from the extreme low of this particular candle to the extreme high of that candle there, otherwise known as extreme low to extreme high. As what I'm then going to do is I'm then going to draw a Fibonacci up like this, over exactly the same, that little micro trend there. I'm going to draw the Fibonacci up to catch them on the way down. Now, what is Fibonacci? Guys, in principle, a Fibonacci retracement is going to work out where the market is going to retrace to against this move. Now, guys, on the date that I'm recording this video for you, the NASDAQ chart is running live, and as testament to how powerful that Fibonacci retracement is, can everybody see that the market is clearly running live? The market is literally just retraced back to the 50%, which not only produces a great little lesson for you, but gives you an idea of why our Fibonacci are color-coded as they are. So in principle, the Fibonacci retracement is designed to show you where the market is most likely to retrace back to after a move. Now, in this case, guys, these are my key Fibonacci retracement numbers. And the lesson I want to highlight to everybody is the 50% Fibonacci and also what we call the evil twins are highlighted in red because that is where the market is most likely to go for. So your key Fibonacci retracement numbers, please do guys write these down, or you can replay the video a number of times. The key Fibonacci numbers are 23.6, the 38.2, then naturally you've got the 50%. You can see the market bouncing off the 50 fib at the moment. Now, I just want to highlight to everybody, as this chart is currently live. This is not in live market replay. I can't try and invent this on the run. It gives you an idea of how powerful Fibonacci is. Now, below the 50 fib, we've got the 61.8. And then we have the evil twins. Now, I think it's really important, guys, particularly if you're trading as a professional trader or semi-professional trader, is that you've got both of these figures on. So the first red, or the highest red, is the 76.8. Okay, and the Fibonacci underneath that is the 78.6. Now, those little Fibonacci's there, I mean, you could not invent this. Have a look at what the market has just done. This just fascinates me. So what the market has just done, as we saw the store at the 50 fib, it's then dropped down and hit the evil twins, 76.8 and the 78.6. The next level below that is the 90%. And then finally, guys, we've got what we refer to as the zero figure or the 100%. Now, interesting point. If the market was to sell down further, as if the market was to sell down further and go below this Fibonacci retracement, then that Fibonacci retracement is no longer valid. So what do we do about that? We say, well, Lockie, you know what? If you've just followed a stair step in the market, okay, or a micro trend in the market, and that little arrow there is that micro trend. If the sellers were to sell down, where do I put my next Fibonacci? Well, that's a great question. So where do you put your next Fibonacci? So all we do is, instead of focusing on this micro trend at the top, just here, literally that micro trend, we say, well, where's the next step in the market? So again, we're focusing on, you'll hear this language over and over again, guys. Anything you do with me, you hear it over and over again. You'll see extreme low, and then we're going to move to extreme high, which in fact is just there. And there's our little low. So what we've got is a beautiful little stair step in the market. So you've got extreme low to extreme high, back to extreme low. Now you'll typically find is that extreme high is prior to the extreme low being created, which is good fun because it actually makes drawing of the stair step quite easily. Or quite easy, I should say. Now, if that little candle there had a lower low, then naturally our stair step would come across there. It's a match low, so you can draw off either one of those if you would like to. There's a massive lesson. If I can jump up and down on the microphone for you, we always draw our Fibonacci up to catch them on the way down, or we draw our Fibonacci down to catch them on the way up. Now that is absolutely fundamentally important. As if you get a chance to log into the live trading room, you'll actually see me doing this every day. Now, as we were saying before, if the market was to sell down, and it goes beyond the original Fibonacci retracement grid that you had on your chart, then all you do is you come down here. Let me just come up top. We're going to draw another Fibonacci retracement that looks like that, and we're going to draw it from here all the way to the top. Naturally, we've drawn our Fibonacci up to catch them on the way down. And you might actually find as these guys bounce around, we might sell down, bounce on this Fibonacci and go back the other way. So key lesson though, guys and girls, if I can, super important. These are the key Fibonacci levels that I personally use in my own trading. They're also the key Fibonacci levels that I teach. I would follow, as if you can, the recipe, and that is make sure your 50% Fibonacci retracement and your evil twins, what you've just been introduced to, just make sure they're really, really obvious. I like the color red because it's a great little warning sign, because that's where the market will typically turn. Now, to give you an idea of how powerful that is, we can get rid of some of the detail on the chart. I'll just strip this detail away now. And what I'm going to do is I'm going to bring my Fibonacci back up to where it was, and we'll just have a look at where they're failing, because as I had a bit of a giggle before, fancy that, they're failing at the 76 fibs and the 50 fib. This is a live chart. As I say in my trades of the day, these charts are live. There is absolutely nowhere to hide. These are your key Fibonacci numbers. And what I'm going to do for you, ladies and gents, in the next video is actually show you my key Fibonacci extension numbers, because the Fibonacci extensions are fractional and also round at the same time. All right, so two different Fibonacci theories out there in the world. So we'll move on to the Fibonacci extensions, and I'll show you what I mean by fractional versus round number Fibonacci.